This is Cross-Border Investing, where we look at exciting investment opportunities across Africa. I'm your host, Tshepo Modiba. Our guest today is Langa Madonko from Africa's Strategic Impact Fund, who lists amongst his great achievements to have traveled 32 countries throughout the continent. And of course, my lovely co-host, Tshepo Modiba. This week, we are focusing on Kenya's banking sector. Tshepo specifically is going to give us some great insights on the financial aspects of it.
Thank you, Tshepo. Now, growth in the banking industry is outpacing Kenya's GDP. The East African country's banking sector has increased its asset rate by about 14%, much faster than the country's economy.
Langa, we'll start our discussion on Kenya Commercial Bank. Your insights on the bank as a whole?
Well, basically, Kenya Commercial Bank is the largest bank in Kenya by assets, with assets for about $4.7 billion. A good bank that has experienced growth. It now has a presence in 6 East African countries, 400 ATMs across the region, 222 branches, 175 of those being in Kenya. In terms of penetration of branch network, it's currently the leading bank in the country, one that I personally like.
Okay, so you know, those are impressive stats. They've managed to get to a leading position. In terms of the banking industry as a whole, how good is the banking penetration? How much of that have they accessed? Is there scope for them to grow and further, specifically in Kenya?
I think one of the things that they have done well is that they've managed to use the branches effectively in terms of the cost of rolling out compared to all their competitors. And they've also gone into a phase where they are also starting to roll out the agency model, which is something that is doing very well in Kenya. I think there is still scope for growth because the penetration rate of banking in Kenya, like in most African countries, there's a lot of people who are outside the formal banking sector. And I think Kenya Commercial Bank is one of the banks that will capture part of that market.
Okay, and then the exciting bits, I know the big bankers like the investment side, the investment banking side of this. Is this an area where they're doing particularly well?
Yeah, I think comparative to some of their competitors, they could do better, but their main focus has been on the retail and corporate banking side, and they've really gained ground there. And I think once they fully develop their plan in terms of the East Africa market, then they'll start to experience more growth, and it will be growth across the region and not only in the Kenyan market.
That's a powerful point that you raised. You started talking about the rest of East Africa. It's an area where they're growing particularly quickly. Is it the same banking model that they're taking their retail and commercial? Yeah,
for now they're taking the same banking model, retail and commercial, into the rest of the continent. I think for them that play makes sense because if you put together Tanzania, Kenya, Uganda, Rwanda, Burundi, and Uganda, you get the same population size from the region that you'd get out of Nigeria. So on a retail scale, I mean 170 million population for the East Africa region. Really makes sense for you to push the retail aspect.
So exciting times ahead in terms of potential growth in revenue and profits for them, you'd say?
I think it's exciting times in the East Africa region, and in being the largest bank by assets, they've got the infrastructure to take advantage of all the opportunities that will continue to arise in the region.
And from a market share perspective, do you foresee them coming under increasing pressure, or is this something that they'll be able to stave off?
I think the pressure that they'll experience will come from an area that is more not from conventional banking. As Africa begins to embrace mobile banking, as you know, in that region, Safaricom is a big player. So if we start to see Safaricom expanding into the rest of the region, which I think is in their plans, and start to offer more diverse services in terms of their banking offering, then we'll start to see them experience pressure. But from traditional banks, in my mind, I think all the other banks have been a bit slower in terms of their expansion into the region. The only threat in that space would be EcoBank.
Okay.
Yeah, but I think they will do well.
Okay, let's leave it there. Those are good insights. Can we move on to the next discussion, Tshepo?
Well, Tshepo, as Langa has mentioned, Safaricom, their version of mobile money MPESA has become common currency in Kenya. It was introduced in 2007. About 80 billion shillings in monthly MPESA transactions are now being made, and a total of 130 billion shillings move in and out of the mobile system via 45,000 independent agents throughout Kenya.
Langa, if we jump into this mobile banking discussion, it's an exciting area, lots of growth. You see a continuation of that theme?
I think looking at the way that East Africa is built, in fact the entire continent, there's a huge opportunity for mobile banking to really be the game changer in terms of the whole financial inclusion.
And why would you say that in particular?
I think if you look at, say, let me take Kenya for example, the mobile penetration rate right now for smartphones is about 60%. Right. For phones in general, it's about 74%. Now, if you then go back to the discussion we had on KCB, KCB has 175 branches in Kenya, 222 across East Africa. Now, mobile banking is something that will give you the ability to reach into areas where others could not, and the use of agents such as your shops, your retail outlets, your garages, such as the model that's currently being used by Safaricom, will allow you to gain traction and into areas where you do not necessarily have the branch networks, and you do that faster.
Sure.
Yeah.
And you foresee a continuation of a take-up of the technology? I know the technology is there, but will the take-up be there?
I think the take-up will be there. I think currently, as the episode mentioned, there's assets are growing by 14%. Acceptance of mobile banking in Kenya is growing by about 9%, while acceptance of internet banking is growing by 3%. Sure. By comparison, if you jump to West Africa, there's a company called Wari out of Senegal, also doing phenomenally, about 18-19% growth in terms of the mobile banking space. So this is something that really makes sense for the African growth story.
Okay. So is this why we're seeing the likes of KCB injecting a lot of money into trying to develop their own mobile banking solution? And do you see a continuation of that theme?
Yeah, I think everybody's going to be in a hurry to try and get into that space because, I mean, like I said again, 70% already have a phone. If you can bring your product so that it makes sense to the market and you can guarantee them the security that they're looking for and also the functionality in terms of the banking products, then definitely it's something that will continue to grow and be a big player in terms of the banking space in Africa.
And what does that mean from a traditional retail banking perspective? Does that mean thinner margins? Does that mean limited growth?
Well, I think from a traditional banking perspective, one of the things that I've noticed in terms of research on the whole mobile banking space is that mobile banking does not necessarily do away with the branch model, but it creates an environment where you have a greater efficiency. Right. You have less branches, but traditionally, of course, the margins that you get from mobile banking are smaller, but because your overheads also continue to go down proportionately, it doesn't put that much pressure on your margins. In fact, because you're now playing a numbers game, you're more likely to experience growth in terms of your return.
So your view is that it's not necessarily going to replace traditional banking, it's just going to augment and tap into markets that traditional banking hasn't really gone into?
Yeah, I feel it's more a tool for including the previously excluded. There will always be a business case, I think, for traditional banking, and yeah, I don't think it will replace it. I think it's something that comes in to augment it.
Okay. All right. That's a very interesting discussion around mobile banking. If we can then now extend that discussion and move into the final stock that we were going to talk about, which is Stanbic CFC out of Kenya. This is a very impressive bank in terms of the awards that they've won. I think Investment Bank of the Year in the continent. They've won that award in Kenya and Tanzania and in Uganda. What are these guys doing right?
I think one of the things that these guys are doing right is taking advantage of the Standard Bank footprint.
Right.
I mean, Standard Bank by presence is the second largest bank in Africa, by assets the largest bank, and then obviously leveraging from the relationship that CFC has with Standard Bank. I think they're doing tremendous things in the East African region.
And I think what a lot of people forget is just how long Standard Bank or the Standard Bank brand has been in East Africa and Kenya in particular.
Yeah, and you need to remember that also CFC Stanbic is the amalgamation of two banks, Stanbic Bank that was there already and CFC. And leveraging on the presence and the structures of both banks, they've been able to capture a lot of the corporate and investment banking that's done in the region. And like I said, again, it goes back to also Standard Bank as a group, and CFC becomes their play in the region.
Now, you know, these awards are all good and well, but does that translate into money coming in? Are these guys making good money, or are they very profitable as a bank?
Comparative to everybody else, I think they're doing well. Yeah. Compared to banks in general in Africa, I think they're doing well, and they're starting to also grow their footprint in terms of the retail banking in East Africa. I think recently they've gone into South Sudan, following the likes of KCB.
Isn't that a big risk? I noticed that South Sudan is almost 15% of profits from last year. Given the political unrest there, does that not make investors potentially a little nervous?
I think, as sad as this might be to say, in Africa, the higher the risk, the higher the reward and first mover advantage. I mean, you're going to see a lot of the guys in the banking space starting to move in. I know that KCB is already in there, EcoBank is also in there. So sometimes you have to take the risk in order to get the reward.
So this is another one of those banks that you'd be particularly looking at closely if you're an investor. I know they've got a decent return on equity, 17%, and that's increasing. This is one that you'd be looking at? Yeah,
this is definitely one I'd be looking at. I think it's all the fundamentals there are correct. Good, strong management team, taking advantage of the group structure. It's a good bank to be in.
So if I summarize the discussion today, this is an area that you're particularly excited about. Good stocks, good prospects, mobile banking, exciting. You'd agree with that?
I think, yeah. If I had $1 billion to invest, East African banking is definitely somewhere where I'd be putting my money.
There you go. Let's leave it there. Thank you for your time, Langa. Thanks to my guest, Langa Madonko from Africa Strategic Impact Fund, and to Tshepo Modiba. That's all from me and the cross-border investing team this week. Remember to follow me on Twitter, that's @Modiba_Tshepo, and use our hashtag, which is CBI. Please send us your thoughts. Goodbye.